So ultimately, what is going to be a bigger impact on the markets this week, the FOMC meeting or the election?
My guess is that the FOMC is going to be a more meaningful impact, and not just like on one particular meeting. I'm just saying the Fed's impact on the financial markets is likely to be much more substantial over time than the presidential election because there's all sorts of constraints that exist in the president's ability to actually execute policy or campaign rhetoric that they're saying.
Talk about gold now. So gold hitting new all-time highs yet again. It's interesting. Let me just flip over to a chart of gold so we can take a look at this together. It's interesting how it's also moved pretty much in tandem with risk assets like stocks, as well as also the DXY, the dollar. Ever since basically the beginning of October, they've both been moving up together. Now, the dollar has been following, I can show that chart in just a minute, but the dollar has been following the 10-year yield. So that's a separate issue. But more or less, gold is just reacting to what exactly? Because in the past, the dollar and gold have held a pretty consistent inverse correlation, I would say. And we certainly don't see long periods of sustained positive correlation between gold and stocks unless the Fed eases.
Well, I think the correlation between stocks and golds and the negative correlation to bonds is really giving an indication of that sort of over easy monetary policy. It's pretty unusual that a central bank would cut in response to inflation above the mandate, growth running at roughly 3% for an extended period of time, and unemployment at or close to multi-decade lows. But that's the situation that we are in, and that overstimulation in the economy of the economy by the Fed necessarily leads to stocks and gold's hard assets essentially outperforming soft assets, which are bonds. I think
Yeah.
the story with the dollar is a little confusing because part of what is drawing capital flows into the United States is the fact that the US economy is stronger than the rest of the world and US yields are higher than the rest of the world. And so for now, you're getting that dynamic where the Fed is easing aggressively and somewhat counterintuitively, the dollar is rising as capital is flowing in to take advantage of stronger US growth and higher yields.
Right. So gold, is it signaling something that's going to happen with either the financial markets or politics, foreign policy? Why is it so strong?
Well, I think what it's giving an indication of is the fact that monetary and fiscal policy in the United States and across the developed world continues to be far too easy relative to inflation risks and the underlying economic conditions of those economies. And, tack on China, which is engaged in an aggressive easing cycle. And basically, we have a global coordinated easing into a global economy that's basically running at about 3% real growth on average for the last couple of years. This is not an economy. We have a financial crisis level easing that's occurring in the global economy at a time when we have nothing like financial crisis like economic conditions. And so, fiat currencies between each other, the dollar and the euro and the yen, et cetera, those will trade based upon relative to conditions. But what gold is telling you is that all fiat currencies are going down meaningfully in hard currency terms.